Hi everyone, welcome to this week's edition of Midweek Market Update. I'm Ashley Rosser of Victory Fiduciary, and today what investors are really focusing on is this significant drop in target stock value that we've seen happen over the past 24 hours. And so we're right in the middle of earnings season right now, and so during earnings season, companies have to report on revenues from the previous quarter, as well as give kind of their forward-looking guidance for what they're expecting for the next 3 months. And they're kind of judged on two things. They're judged on how closely they met last quarter's earnings projections, but they're also, we listen to what they're saying they expect to happen for the next upcoming 3 months. And really across the board, retail sales have just been really disappointing and discouraging, looking both at the previous 3 months earnings as well as the forward-looking guidance. And so we saw Walmart specifically had a pretty significant miss when it reported earnings, but when Target came out and gave their report yesterday, I mean, they weren't even the same realm in terms of talking about how far off their estimates were for what they expected earnings to be. And this really concerned investors, obviously. And so we saw Target stock take a significant drop, like I said, down 25% just since last evening. And so I think that this is a really kind of important turning point in this correction process that we've been in, because I think that what we're finally able to kind of admit here is that, we're really beginning to feel pain regarding the economy and slowing economic growth. And so we know that we're at all-time fuel prices for many areas of the country, and so we still have to go and we still need to go to work and do the things we need to do. We're still likely using the same amount of fuel. It's just costing us significantly more to do so. When we go to the grocery store, $200 what you could buy this week is not the same as what it was a few months ago. And so Americans are having to decide, am I going to give up some of my discretionary money to buy the same amount of groceries, or do I have to cut back and not get as much? And so these are decisions that we're making. And so that last year we talked on and on about the fact that there was going to be implications for dumping trillions of dollars of cash into the economy. And so we got that initial sugar rush, which kind of got us through the pandemic. But now we're dealing with the crash. So that sugar is gone. And now we're kind of in this haze where we have to deal with the reaction now of that action from stimulus. And so what we're seeing is that we've likely begun to set ourselves up for a period of slowing economic growth. And so that's going to have implications not just on the market, but really just kind of broadly across the board. And so interest rates continue to rise. Inflation continues to kind of be unchecked. And yesterday, the Federal Reserve they held another special meeting, and Jerome Powell made the statement that they will not hesitate to continue to raise rates until inflation comes under control. So this is a huge focus right now. The Federal Reserve is trying to find ways to get this inflation to kind of finally stop running hot and as unchecked as it is right now. And so Target and what we're seeing, I think, is just probably the tip of the iceberg in terms of beginning to finally kind of unpack some of the damage that's kind of been there. And so this video today, I know it sounds a little discouraging, and so I just want to be realistic, but there's things that investors can absolutely do to kind of get through whatever situation. And people ask me, I have clients calling me like, are we going into a recession? I don't know for sure. It's quite possible given the scenario that we're in and kind of what we're coming out of. And so that's possible. We may not, but I don't even know that necessarily right now it matters. So we're going to go through. I want to show you a couple of charts here on some of the different indexes so that I can kind of just show you where we are. As you can see right now, currently, very negative day. The QQQ, which is the Invesco large cap growth fund, down 4% for the day. Now, we actually had a nice run of 4 trading days where we either kind of consolidated or had some really nice returns. We were actually beginning to get up above resistance, and I was hopeful that we may have been a turning point. But after today's action, we're going to give back most of what we had kind of seen over these past few days. S&P 500 right now is down 3.4% for the day. Technology is down almost 4% for the day. So really, and again, yes, a lot of that now, Target was really driving the Dow index today, but it's not even so much Target's percentages in these other indexes, but just kind of the general now investor sentiment after that report came out yesterday. So what I want to just kind of show you is look at some of the indexes, kind of where we are. And so right now we are looking at, I'm looking for my symbol here. Yep, so looking at the S&P 500, and what I'd like to kind of show you here, actually no, this is the NASDAQ, but what I want to just be able to kind of show is where we are and just kind of how far below our moving averages are. You see our red candlesticks here. So when we've had sell-offs, we've just had really kind of steep sell-offs here, and we've just really struggled here. And so kind of coming back to show relative strength is sitting in the 40s. So yes, that is oversold. Really, honestly, the average table right now is 48.6% oversold, which is pretty, that's a pretty marked oversold status. But you can see our 50-day and our 200-day moving averages, we are multiple standard deviations below here. So something to look forward to. And so, like I said, with the NASDAQ, just kind of seeing this steep decline, here is where we were yesterday. So we actually began to kind of try to recover some of that. And I was hopeful, but now seeing the actions that we're kind of going through today, I think that we're going to give up most of that. And so if we take a look at the S&P 500, similar, not quite as steep of a decline. The NASDAQ tends to be super tied to inflation because we tend to have a lot of big tech names in there. And so, but again, kind of the same story here. Really some steep sell-off days here. We had just begun, we climbed up here, and so we were really just kind of coming back into that 20-day moving average, which would have been our first line of support to kind of get across. But after today's action, I expect that much of this rally here is going to be wiped away. The question is going to be, was this just kind of an overreaction to Target's numbers, or is this kind of the sign of kind of a steeper correction to come? And so again, RSI here, very similar to where the NASDAQ is in the 40s, which is absolutely, it's oversold, but it's not as oversold as you would expect to kind of see the correctionary process that we're in right now. And so just to show you, so across the board we're just seeing prices continue to be under pressure. And so what can investors do in this situation? Because there is some things that I think is important for us to talk about. Number one, and you've heard me say this over and over again, it's really important that you have a plan for your portfolio. And so, 2 years ago, it's kind of like everybody was making money no matter what. And so it seemed really easy, and everybody was like, this is easy. I can put money anywhere, and I'm doubling my money. And so in situations like this, all of a sudden, you begin to understand that it's not as easy, especially if we are heading into a steeper correction. So really make sure that your portfolio, every allocation there needs to have a purpose. You need to know exactly why you're holding what you currently own. And if it's not holding up to whatever that purpose was, then it's time to maybe consider cutting that out and putting something in its place. So that's really the first thing, is just to make sure that everything has a plan. The second thing is to really try to not be driven by emotion. I know it's really difficult. This is a very uncertain time. I can tell you right now that the overall sentiment of the market is overwhelmingly bearish, meaning that people believe that the market's going to continue to go down. That's actually a bullish signal. It's typically a contrarian indication. So when everybody says, oh my goodness, this is absolutely horrible, I should get out, you should probably do the opposite of that. And so I know it's tough, but at this point, when we look at some of the areas where we're at, it's likely that we should begin to see at least some sort of a reflexive rally. But at this point, to kind of sell and raise cash just because you're sick of seeing negative numbers in your portfolio, that might not be the best idea. And then third is you really want to be looking for areas that tend to hold up well during periods of high inflation and suppress economic growth. There are areas out there that tend to do better than others. And so this is where it kind of also comes back to making sure that we have a plan, that we want to like look at our portfolio and say, I understand why I'm holding these positions. These are their purposes, and I'm going to reevaluate them periodically to make sure they're still meeting those standards. So I know that there's been a lot of kind of negative press, and you know, you can put on CNBC or CNN and they're talking about, you know, the great crash of Wednesday, you know, and the billions of dollars that were removed from Target's stockholders in one day. And yes, this is all distressing information, but just as a reminder, again, we don't want to just always be reacting to the news necessarily. So we want to make sure that we are not acting emotional and that we are doing our best to use the information, the data that we have to drive our kind of our next actions and our next movements. So if you have questions, though, you can always reach out. You can give me a call. Here's my number here. You can also email me. I like to hear from our viewers, and I really just kind of encourage you now that I know things can seem a little scary right now. So we're always here to help. You can give us a call. We're always, even if you're not a client, just to kind of talk through where you are and what you're doing. So thank you so much for joining us today. Stay safe, and we'll see you again soon.